Good afternoon, everybody, and welcome to Afternoon Market Action, Western Wednesday. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always glad to be here, always glad to have you here. If you can hear me loud and clear, please respond in the affirmative in the chat with VV Nation to let me know that everything is good to go. Good to go. A lot of stuff going on in the market today. More companies. This was a very was and is still a very busy earnings week. Companies hitting, companies missing, stocks going up, stocks going down. There's a lot going on. And as an investor in the market, you need to keep your head off the swivel, stay focused, and concentrate on the things that are going to effectively help you to make money in the market. And that's what we're here and all about. I don't want to push any agenda, any stocks, listen, it's all about what we can do here to do the work so that you can reap the rewards. That is why you're here. So I see that people are here, are coming in, are responding with VV Nation coming across the board. Thank you for that. And today's going to be an interesting day. I've got an interesting topic that I want to cover today that I think will look at what concerns a lot of investors in the market, whether you're brand new, whether you've been around for a little bit of time, or whether you're a seasoned investor. I think I got a good topic to cover, especially because of what's going on with earnings. All right. So in VectorVest, we can see what companies should be beating or exceeding earnings. But the problem is we don't have an indicator that can be able to forecast what forward guidance is going to be. And a lot of companies can hit earnings above and beyond, but maybe revenues didn't hit, or maybe the guidance going forward is lower because of the atmosphere, because of the market atmosphere, because of rising interest rates. It's going to affect companies' ability to do business. All right. So another big thing, what are companies doing to make the bottom line look better? Well, they're going to do a lot of layoffs. That takes a lot of money off the books. And it makes them look pretty on paper, but are they? All right. And it makes them look pretty on paper so that the investors into the companies are satisfied. But as an investor, is it still a good play? And again, today's topic is going to be an interesting one. Tomorrow, can you show what the earnings are the next day? Sure. I got Trending Thursday tomorrow. You want to see what stocks have earnings for Fridays? We can do that. We can do that today as well, John. I'm going to show that today. All right. We got 123 people in here. I think my alert's probably already sent out and people have come in on the alert. So this is what I want. I want to try to get us to 300 people. That's the goal. I'm going to get us to 300 people. So I need you guys to share the link. Joey's going to put the link in the chat so that you guys can share the live link now. I want to get 300 people in the room. And then after that, I want to get 4 and then 5. I think that the content that we bring to the market, the content that we bring to the community warrants more people than what we have in here today. And if you agree with that, share the link. All right. If you agree with that, Joey, are you going to put the link out there? He might have stepped away. I think he's a little busy today. He is. I know he sounds like he's preoccupied today. He's probably got a lot of stuff going on. All right. So with that, let's take a look. What a poor dat. What is that? What is that, Asa? I'm not sure what that is. All right. You don't like my hat? Today's Western Wednesday. I got my cowboy hat on. I got my cowboy already shared on Facebook and Twitter. Thank you, Roger. All right. So let's take a look at what's going on in the market. Today, look at that. Look at our gauge is smack dab in the red. A lot of red going on. So from an earnings day today, it looks like more companies, or the companies that have missed, that are really dragging down on the market today. All right, what a poor day. Oh, is that what it is, Asa? What a poor day. Well, you know something? Nothing wrong with it. Nothing wrong with a down day. Down days give us, something, just in case you didn't know, down days give us better opportunities to make money. You guys do realize that stocks go down. You said I got big fingers. I ain't got big fingers. Stocks go down faster than they go up. You guys do know that, yeah? Type a 1 in the room if you know that. Type a 2 if you didn't realize that. But stocks go down faster than they go up. So on down days, it does give us great opportunities to make money in the market. So don't be afraid. Don't be afraid of down days, and don't be despondent because of down days. Play it. Play it. Play it. Play it. Play it. If the market gives you a down day, play the down day. If the market gives you an update, play the update. And I say that because this is more of a trader's market, more so than it is a long-term trending market. So when the down days come, don't be afraid to take it. All right, don't be afraid to take it. Buying Google today. All right, we'll take a look at that. Takes the stairs up and the elevator down. Absolutely, Michael. That is a good analogy of the market. It does take the stairs up and it rides the elevator down. Oh yeah, but running low on investment funds. And that's a whole different story. I can't help you with that. I can't help you on that. And I wish I could. I could, but I'm not. I can't do that. All right. So let's talk about what's going on in the market first. Let's do this. I got something for you. Let's talk about what's going on in the market first. So I'm going to bring up the market timing graph. Where am I looking for? I'm looking for that. Bring up the market timing graph. Now, this is where my conversation is going to start today. When we look at stocks moving on earnings, we see the pop and we jump up and we go, woo, yay, and we jump on board. A lot of that is because of technical activity. Stocks coming off, and as I look at the market's going through a level of support. But plenty of times, look at the market here, market bounces off support and starts moving up. You look like a genius when you go and play the technical bounce, right? But how many times have you tried to play the technical bounce on a stock only to watch the stock go back down? Type of 1 if you've been involved in that. You've watched the technical bounce on the stock only to watch it come down and come down harder than when it went up. Type of 1 in the room. Now, that's the crux of my conversation today. All right, before we get into the news and all of that stuff, that's the crux of my conversation today. Because Todd Schaefer and I were talking about what was going on in the market and watching the market fall. And I said, we're at a level of support. And he says to me, he says, it's amazing how many people, how many technicians come out of the woodwork right now. How many technicians come out of the woodwork right now and they're bolstering about, hey, the market's going to do this and da-da-da-da, da-da-da-da. And a lot of you, especially if you're new to the market, sit back and you go, what should I do? So the other side of the technical side of the market is the fundamental side of the market. So Todd and I were having this conversation. I said, I've got a feeling that the majority of the investors out there, a lot of investors out there, are more so swaying to the side of the technicians because it's easily definable. I can see that, based on any one of 100 different indicators out there, that the market should do this or that a stock should do that. But what we don't always take into consideration is the fundamental side of the stock. So many of you get caught up in that stock that technically rises. But then when you go back and look at the fundamentals weren't there to substantiate the move. And then you wonder what happened. So there's two sides of the coin when looking at a stock. When I'm looking at the technicals are telling me what's going on with the stock now. Boom, I jump on board and I go. But the more, and I don't want to say educated or the more seasoned investor really does want to look at the whole picture of looking at a stock. They want to look at the fundamentals. Does the stock have the ability to outperform the market? Does the stock show me some safety in regards to coming to earnings? So when we're looking at stocks, both camps play a role. But when you get stuck on just one camp, you can put yourself in a world of hurt. Do you agree with that? Yes or no? Do you agree with that? If you get caught up on one camp, whether it's the fundamental camp or the technical camp, you can put yourself in a world of hurt. Type a yes if you agree with that. Type a no if you don't agree with that. All right? And I think that for the purposes of having this conversation, I think it's a conversation that sometimes you got to have. Because I'm going to put that right now through to what's going on in the market. As I watch, the market is falling. I've been talking about a level of 57.15 as a level of resistance. This is 57.13, and the market wasn't able to break through. I've been saying keep your eye on that. Yesterday, the market fell. The 3 went below the 8. Now we're at a fib level. We broke through a fib level of 61.8. We came down to a level of support. We broke down below that. What have I been saying for the past couple of weeks? That I think we've got a lot more downside in the market than we have upside. And I've argued the case why I felt that way based upon the market's conditions. Still high inflation, even though it's coming down, and I understand that. But we still have a hawkish Fed. We have a hawkish Fed because even though inflation is at 5, he's trying to get it down to 2. I still see signs that there's some economic growth. That's not what the Fed wants to see. I still see signs of employment growth. That's not what the Fed wants to see. We saw durable goods come out yesterday. I saw signs of growth there. That's not what the Fed wants to see. So when I always ask the question, do you think the Fed needs to start to cut back or pause on interest rates? And then I get people in the room that say, yes, he needs to. But when I argue the case that I just did, the Fed on paper can't yet. Because inflation, even though it's getting better, is still not under control, and it's not where he wants it to be just really right now. John says, Glenn, I really don't like shorting with low buy-to-sell ratio like this, but it's telling me how bad the market is. Ooh-wee. Absolutely. Someone asked me recently about the buy-to-sell ratio. The buy-to-sell ratio is at a level of 0.16. The market's looking for a bottom. It's kind of interesting that the indicator is looking for a bottom where we're just coming off of a little level of a swing high. So you know what John just said really does illustrate how bad the market really is right now and how bad it could be going forward, at least for another week or two. All right, so something that I'm going to look at real quick. I'm going to draw another fib line. From, he said October. That's the low to the high. I don't know if I want to do that. Well, let's go do that. So I draw the fib level from this high to this low. We peaked. And now we've got to get a sense of when the market is going to start to look for us to get back into the upside. So I'm going to erase this, and I'm going to do a reverse. I'm going to do a fib retracement from the low, not from the high to the low, but from the low to the high. Let's go see where we are. Ooh, interesting. All right, so now we broke through the level. Oh, man, what just happened here? Let's go to my fib. Let's go style. Now, because I drew it from the low to the high, it's a little different. Let's go put on the 38, green. Let's make it a little darker. Let's go to the 23, make it green and a little darker. The 50, I'm going to leave gray. Let's go see. So now let's see where we stand. From the level of now getting back into the market, where are we coming down to? We're coming down to that 50 level, which is really not a fib level, but people use it. So now I know that I've got some downside to a price right about here on the market, which is around the price of 54.64. That is the 50 fib level. Where are we at now? 55.50. If the market still has more downside, we've got another level of support sitting right here at about 53.99. Notice that if the market continues to run lower, the buy to sell ratio will continue to run lower as well. As I look at that, where do I see the market's going to give us a sign on when we can start to get back in? Let's see what goes on. We already broke through this level of support sitting at 55.60. We're at 55.51. Let's see if this 50 level can hold. All right, now Asa says, hope I can weather the storm. Well, this is what you do during these times. You hedge your portfolio. If you don't want to short stocks, what can you do? You can buy puts. You can sell covered calls on your long positions. There's a lot of things that can be done. If you don't want to trade options, well, then you can look at contra ETFs. I did a video yesterday which specifically talked to you about how to take advantage of the current market's conditions if it continues to move further lower. Looking at contra ETFs. 50 is a strong level of support, but 62.8 is even better. I got 61.8. 61.8 is a much better level from a fib level. And we do have going down to that level. What is that price? The 61.8 is an actual price of 53.43 on the market. We do have more downside, and given the current market's conditions, we have more opportunity to downside. I just want you guys to be prepared. So we saw that the market from a fib level peaked here and pulled back. Now I reversed the Fibonacci to draw from the low to the high to give us some sense of what to look for to get back in. I'm not ready to look to get back in right now. All right. So did that conversation, one, make sense? Well, actually, did it make sense, and was it worth your time? Type a 1 in the room. Because I think it's not all about, I'm not finished with the conversation, but I use that conversation just on the market timing side. Now I'm going to tie that conversation into the stock side as well. All right, I'm going to put that, and you never liked fib. Yeah, Mike, I'm trying to broaden my horizons, Mike. I really am. I'm trying to broaden my horizons, but it's not just for me. It is also broadening my horizons as I present to you. All right, so it's broadening my horizons as I present to you. All right, so that's what the market looks like. The market's gone down for now two big days in a row. The 3 and the 8 is crossed. We broke through a fib level. We broke through another level of support. I want to see if these levels right here at 54.64 hold, or the fib level of 61.08, 61.8 holds at 54.43. Betting on Google tomorrow. Be careful with that. Be careful with the betting on any one particular stock, especially because of what we're going through right now. All right, let's get into what the news looks like. All right, let's get into the news. And here we go. U.S. debt default could spark mass unemployment, payment failures, and catastrophe that would raise interest rates into perpetuity. Now, I look at this article, I look at this headlines. That's a headline meant to scare you. All right? Let me take some of that scare out. The chances of us going through that, a U.S. debt default, is minuscule. I think that even if it's a last-minute deal, our Congress will come together and put something together in order to raise the debt ceiling. This is a scare tactic. All right, gaslighting, however you want to look at it. All right, I think that I don't like this, but it's out there. It's out there, and this is what people are thinking. And this is why I want you to keep your head off the swivel. It's all about concentrating. I showed you from a market timing perspective what to look for. If we default, that would be very, very, very bad. Would we become a third world country? No. Would we be able to get through it? Yes. Will it be tough? Also, yes. But I think the chances are extremely small that will happen. Maria Fang says 61.8 is the bottom. Actually, we're already starting to look for a bottom with the buy to sell ratio. I'll look to see if the MTI starts to come into play here. I think that based upon how far away we are from that level, that these could stay in oversold territory for a little bit, a little longer than I'd like, Maria. All right, would I call that the bottom? Based upon what I can see right here, that would be a good bottom. That would be a good bottom. All right. So Chris is right. It won't happen. It would be a stain on who's in Congress right now. Right. And they don't want that to happen on their watch. All right. So I think it's minuscule that'll happen. But this is an example of a scare tactic that I don't want you guys to get caught up in. Economic turmoil. Summers says inflation won't get back to 2% without a downturn. I agree with that. I agree with that. If the Fed continues to raise interest rates and hurts the economy, that makes sense. Type a 1 if you agree with that. Now, that's not a scare tactic. That's real. I think that that's a real statement. Type a 1 if you agree with that. All right. And as I'm looking at the market, as I'm looking at the atmosphere within the market, that makes sense. And we're seeing it. It's not only that it makes sense, we're seeing it start to happen as I showed you on the market timing graph. So there's a difference between the two stories. One, I think, is inciting fear, and one that's inciting reality. Inflation is most affected by unemployment. And Chris, the unemployment rate is not where the Fed wants to see it. People are still actively looking for people. But on the other side of the coin, there's a lot of people who are getting laid off as well. Now, the companies that are laying off are the bigger companies that are trying to keep their bottom line in the black. So where do they cut the fat? On jobs. And that's the main crux behind that. But the employment world is still looking for skilled workers and willing to pay them a lot of money for those skilled workers. So there's a little bit of a dichotomy going on, enigma going on. Well, we're cutting on the sales, on the job force, but there's a lot of people out there still looking for people. All right, so Chris is right. It's going to get a bunch worse. I've asked this question on more than one occasion. Do you think that it gets worse before it gets better? I think the answer to that is absolutely. The other day I mentioned trailing stops. Someone said, if you like trailing stops, you'll love, Profit Locker Pro, Debbie. That's another tool. So I remember the comment, and I remember, I don't remember who, I think Roger said it. I believe Roger said it. Said that if you like trailing stops, you'll love the Profit Locker Pro, which is an additional tool. And what it's designed to do is lock in profits as a stock trails back, but a little better than just a trailing stop. All right. Next story. Microsoft. There's two parts to this story too. Microsoft stock rallies on earnings and bullish AI outlook. I'm big on the whole AI space. I think that it's a good space to have your money because it's a hot topic, and more companies are aggressively going after it. The other side of this equation is that the UK vetoed the deal from Microsoft to buy Activision. That's a big blow to Microsoft. It's going to be a big blow to Microsoft. I do have that story somewhere else, but I didn't want to show the both of them. It does rally on earnings and a bullish outlook. The sustained rally, even after the British, and it also brings in the British regulator said it would block Microsoft planned $68 billion acquisition of Activision. Analysts responded positively to Microsoft AI prospects. This is another reason why I'm big on AI. It's a mover. And it's a big mover. And Microsoft saw the writing on the wall when they went and put the $11 billion investment in OpenAI so that they can get into ChatGPT. That's a good news. All right. Meta set to report first quarter earnings after the bell. I think that they do affect the bottom line in a positive way because they laid off people. That sucks to say that the company made money, or looks like on paper that they made money because they laid off people. But it's business. Business has got to report to their investors. And I think with them laying off the people, it helps to make the bottom line look better. All right, so I think that they beat. All right, and Facebook parent could record record a fourth quarter consecutive quarterly sales drop. First quarter results came in at a low end of guidance. We'll see. I think that as that's going on, the laying offs were trying to be a way to make the bottom line look better. The stock has rebounded this year after a dismal 2022. All right. Next one, Boeing. Boeing plans to boost 737 MAX production to 38 planes per month. That's a lot of planes. But we all know that there was some government thing that came into place for regulation that they had to meet a more stringent regulation in order to get the planes out. Looks like they're going to push past that, whatever it takes for them to do it. Revenue jumped 28% over the last year, and the company narrowed its net loss. Boeing on Wednesday reiterated it expects to achieve free cash flow for the year between $3 billion and $5 billion. That looks good on paper too, but this is their big seller. 38 a month would be a lot. There's contracts out there. They'll be able to hopefully fit that contract. Google is better investment than Microsoft. I don't disagree with that. But I'm going by what I see right now when it comes down to Microsoft. So you know something? I'm going to write down Google, and I'm going to show you something. All right? So Microsoft is moving because they beat earnings. But now the question comes up is which is better, Google or Microsoft? This is where this conversation is going to continue on about the fundamentals and the technicals, right? Next one, First Republic handed out billions in ultra-low mortgage rates to the wealthy. It backfired horribly. This stock is getting smoked like a pound of bacon. And you'll hear me say it over and over again, the other shoe hasn't fallen for a lot more other companies, not a lot more other banks like First Republic. They were just one of the first to report the negative, the big loss on the bond investing. A lot of other banks in the same situation did what First Republic did. We just haven't heard it yet. And I think these companies or these banks are afraid to put it out there. But you know something? Here's another story. 11 bank stock tanks today. This is as of today at 8 o'clock this morning, fueling financial crisis dumpster fire. Shares of 11 banks in the ETF KBE, including First Republic, Atlantic Union, and Northern Trust. That's 3 out of the 11. What else is in here? Here they are. And these are the biggest sell-offs. Northern Trust, Independent Bank, Pacific West Bank, blah, 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 blah. Year to date, these are getting killed. I'm telling you that there is another shoe to fall, folks. This ain't over. This is like Guy. It ain't over. It ain't over. Groove me, baby, tonight. It ain't over. So I'm just trying to tell you, how many of y'all picked up on that? How many of y'all just picked up on that? It ain't over. Type of 1 in the room if you picked up on that. All right, so Marines do not wear covers indoors, but I like your cover. They do wear covers indoors when they have a duty belt on. Now, I don't have a duty belt on, but I'm still wearing my cover indoors because I fight authority, and authority ain't winning with me. 3 AI future stocks I like: Microsoft, Google, Amazon. You know what's even better, Maria? NVIDIA. NVIDIA is another one. I think that's the best in the place because in order for AI to work, it's got to have powerful chips. So I'm a big fan of NVIDIA. I think it's better than all of those. All right, Amazon. Amazon starts layoff in HR and cloud units. And guess what? So the layoffs are part of a previously announced job cuts that expect to affect 9,000 employees, on top of 18,000 job cuts that took place earlier this year. That's huge. Big company doing everything that they can do to make the bottom line look good. Depositors will continue to move from regional to big banks. I agree with that. I do agree with that. And I think that there's going to be a lot of regional banks that are going to need help, whether we give it to them or not. I hope we don't. It's business decisions that they made, and there's repercussions to their actions. All right. And I don't think that the government has the wherewithal to back all of the depositors like they did for FRC. We ain't got the money to do it for everybody. And you're right, Ramor. I think more and more depositors will continue to move their money from the regional banks back to the big banks. Is it time to buy the bottom? Not yet, Francisco. I did a nice little dissertation on that in the beginning. Not yet. We're not at a bottom yet. I don't think we're at a bottom. I think we got more downside. But I showed it on the market timing graph using Fibonacci's. Then by November, they will be desperate to hire people again. It's business. Listen, yeah, they will. Santander Bank is closing many locations in the Boston area. Oof. I'm telling you, folks, just be careful. I'm telling you that there's more to go than what we got. I'm bringing up BBBY because it's in the news. How many of you think that Bed Bath & Beyond goes bankrupt? Type of 1. How many of you think that they can get bought by somebody pennies on the dollar type of two? It's getting closer. The stock is trading at what, 13 cents? Something like that. I think that they go out of business. I got to go get my 20. I got to go. I think I'm going to do a video, a short with me running into Bed Bath & Beyond with one of my 20% discount coupons on. I think I'm going to have to make up a video I'm going to have to do a short video like that. We'll see. This is tough. I love this place. Love. I know they announced bankruptcy. I'm wondering if anybody comes and buys them out of bankruptcy, Edward. I wonder if anybody goes and buys them out of bankruptcy. A lot of people say they might get bought. 2, they need to get My Pillow back in the stores and apologize for canceling Mike Lindell. Other than that, I won't shop there. I got you, Jordan. I hear you. Thank God for you, Glenn and VectorVest. Keep me on the right mindset. I'm doing great in this market. Way to go, Charles. Way to go. That is awesome. You know, I was thinking about Amazon, but do they need brick and mortar stores? I was thinking Amazon, but do they need brick and mortar stores? And if Amazon buys them, do they keep the Bed Bath and Beyond name without having brick and mortar stores? And if they do keep the Bed Bath and Beyond name, they'll have access to putting stuff in there as stores. That may not be a bad idea. I just don't know if they need the debt. I don't know if they need the debt. Glenn, you bring up great stories that are happening. That's what I try to do, John. They did with Whole Foods, says Dolly. Do they need? But was Whole Foods going bankrupt? Think about that, Dolly. Was Whole Foods going bankrupt? Whereas Bed Bath & Beyond is. I think it was 2 different stories. I think Whole Foods was great on its own, and Amazon saw that and said, wow, we want to get in on this. All right, we want to get in on this. Bed Bath & Beyond comes with baggage. Does Amazon want to pick up the baggage? So I hear you, Dolly, but that's my answer to that. That's my answer to that statement. All right, and last but not least, let's go take a look at earnings for the rest of the week. Companies that beat earnings. Coca-Cola, this was Monday. I want to go all the way to today. We already know about the companies that did beat. Wednesday, what did hit? Boston Scientific hit. CME hit. Vail hit. Vail hasn't. I had Vail. I dropped it. General Dynamics did hit. That was one of the stocks that was in my list for stocks that I was interested in to beat. And I can't find that list. I got to try to find that list. I did that as a list earlier this week in regards to stocks I wanted you to keep your eyes on for earnings. General Dynamics did hit. Beautiful. What else hit that was good that we know? Hilton hit. That was another stock that was in my list. Woo! I think I did pretty good. Let's go see. Let's go back into the program. Let's go to the viewers. Joey, that was the Monday video, was it not? Yeah. YouTube videos. What was the date Monday? What was the date? 1819 Ford versus Tesla. There it is. 5 stocks to trade for the week. I think it was more than 5. Look at that. Hilton was in there. These General Dynamics was in there. Let's do this. 424. Let's go see how these worked out so far. Not all of these have reported, but these were my stocks on Monday that I felt positive on earnings. Let's go see what happens. Oh boy. Ew. That was not good. Sigh. Wow. I did this on the fly. Enphase getting smoked. I don't understand Enphase. Enphase is a good stock. And I thought it was going to beat earnings. Enphase is a good stock, but look at that. My stocks came out horrible. Good. Googly, muggly. Hold on. Here we go.
No! God, please, no! No! No!
Wow. Oh, well. These were my stocks that I thought were going to, Tesla Q, that was a down play. Pepsi did all right, McDonald's, but the big loser for me was Enphase. Listen, if I can tell you about stocks that do well, I will tell you about the stocks that don't do well. There's Hilton. General Dynamics beat, but look at the fall in the price. Sigh. I'll own it. I'll own it. Those were my stocks. All right, those were my stocks. ENPH is taking tan down. Lots of smoked bacon right there. It is. It actually is. As Richard says, Hilton got smoked too. All right, I'll take it. And listen, if I can give them to you to make you think that they're going to work, I can own it when it don't. I can own it when it don't. All right. Let's go to my news stories. Now, you were talking about Google compared to Microsoft. Let's go put that in there. GOOGL. Let's talk about that. So Google's a better stock, is it? Let's go look at Google and Microsoft. Both of them are safe companies. Both of them have RVs below 1. Google has the VST higher than Microsoft. Microsoft's got a higher earnings growth rate. So when you can sit here and tell me that Google is a better play than Microsoft, interesting. Google does have a buy recommendation. It's got a higher VST, not by much. The RVs are real close to each other, and the RSs are real close to each other, but Microsoft has a higher earnings growth. Well, what does that tell me? Earnings is the engine that drives the stock's price higher, right? Let's go view the stock graphs on the both of them. If I put these both on a 3-month graph, there's Google. Google's at a level, it is now below my 20-day exponential moving average. I love the earnings per share, all right? I do love my earnings per share. The stock is overvalued, but so are a lot of stocks in here. Not only is Google going down prior to earnings, but it's picking up some momentum as far as volume. What can you say about TLT? Hold on, Mike. Let me see in a second. I look at Microsoft. Wow, it went nicely above my 20-day exponential moving average after going below and stopping at a level of support. Here's the technicians. Fundamentally, though, look at the relative value, look at the relative safety. Safety looks good, relative value is okay, and the stock is overvalued. Based upon what you see, which stock do you think is the better stock? Now, nobody's wrong. I just want to, do you think Microsoft is the better stock? Or do you think Google is the better stock? The graph tells me Microsoft is definitely moving from the bottom left to the top right on the 3-month graph. It shows me that Google is doing so with a little bit more volatility. So now I'm curious to know, if you're just looking at the graph, Google's down below the 20-day exponential moving average for 2 days in a row. Who's got the better sales? Let's go see. Google's got a sales. Let's go see if it's rising. There's Google sales. Let's go put on Microsoft sales. Microsoft sales got a nice bump and more steady. The sales, let's go see. The sales growth is at 2 on Microsoft. The sales growth on Google is 0. Oh, you're adding more to it. Oh, wait a minute. So now, the people who are typing in Google, what's making you say that? We looked at the fundamentals. We're looking at the technicals by looking at the graph. This is the discussion that you need to have. Kind of interesting. But I still got people saying Google. All right. Again, there's no wrong answer. I'm asking the question, and we're doing the analysis live. I'm not pushing nobody in no direction. We're just doing the analysis live. Kind of good. Who's buying Fox this week? Nobody is. Fox is losing a lot of money. Fox is losing a lot of money. I think Fox is losing a lot more money than CNN is. Google authorized a $70 billion buyback. Is that going to be enough to get them out of this channel? Is this going to be enough to get them out of this channel? So they announced that, but is it working yet? It's going to take some time to work. Hold on, Ultra Magnus. Google is still an excellent company. I don't disagree with that. All I'm doing is I'm putting forth, I'm in a court right now, and I'm just presenting the evidence. All right? So you want to put this on a 1-year graph? Let's go put it on a 1-year graph. There's Google, beautifully at a level of resistance, haven't been able to get out of. Microsoft has gotten out of theirs. Look at the earnings. I'm not arguing. Listen, you guys look at the earnings on Google. You guys make your own decision. You guys make your own decisions. I'm not gonna belabor the point. I'm not gonna belabor the point. But this is why I wanted to have the conversation that we had today, based upon the technicals versus the fundamentals. Which company is more fundamentally sound? Neither one of them make me want to go ooh ah. Google is a heck of an AI play, but so is Microsoft with that OpenAI investment. I think from an AI perspective, Microsoft may be ahead of the game than Google. Google's trying to catch up. Google's trying to put out their own chat GPT. Microsoft already has access to it, and everybody's jumping on board with it. So again, I ain't trying to, you guys, Tucker will buy it. Tucker will buy Fox. I like Google because of YouTube also. Listen, you guys make your own decisions. I'm just talking. You guys have to make your own decision. All right, would love my perspective on oil. Stay away from it. That's my perspective. All right, I had a whole lot of other stuff, but I think this conversation that we had today, and I like the conversation that you guys are using in regards to Microsoft and Google. All I got to say is look at the graphs, look at the fundamentals, look at the technicals, look at all of it. Look at all of it. All right, I looked at it on a 1-year graph. That 1-year graph gave me a lot of perspective, folks. MSFT, GOOGL. That 1-year graph gave me a lot of perspective, folks. Again, you got to make your own decision, though. I'm looking at earnings rising on Microsoft, way overvalued. I totally know that. Look at the sales. Look at the dividend. Go look at Google. That's a different story. I like the sales, but that's a different story. For everybody who's telling me Google, that's a different story. Now, if you know something that I don't, that's fine. If you know something I don't know, do-da. But look at that level. That's a hard level of resistance. It can't get through. Breaking down below, I got a level of support, but that's important right there. All right, let's go look at some of your stocks. We're going to go straight to that. You want me to look at oil? Oil is being bought up. People are buying up the Russian oil. We picked up more oil in our supply. The price of oil just ain't where it needs to be right now, in my opinion. But we got the holiday season coming up for the summer, which should put increased demand on oil. I think oil will have a little bit of a run for a little bit. I just think that right now, people are not buying our oil. And there it goes. All right, so USO ELF is a beautiful graph for long-term investor. IQ, TFC. Somebody wanted me to look at TLT. Is it too late to get into Kane? I don't know. I saw that sugar. Let's see, HTZ, FICO, Oracle. Oracle is a company that's been around forever. We need to fill reserves at 60. We should have been filling them up at 70. Your best new contract, Bill, I'll take a look at that in a second. TT, Crocs. Crocs is interesting. ZM, that's not Zoom. And MTCHmatch.com. CDTX, that's their oil is also going through a season change. Yeah, I know, Michael. DCMF, I ain't got that. TT is already in the list. Don't put it in there more than once. SPXS, I like that. TO. I just personally bought some of that today. Monster. Yeah. MNST. DCMDF. I ain't got that one either. I don't have that. Cold. One more. CMT. All right, let's go see how many stocks. There's a lot of stocks. There's 20 stocks. All right, first things first. Crocs is the top of the list by VST. At the bottom of the list is CDTX. All right, with a VST, horrible, at 0.43. As I look at these stocks, a lot of buys. The sells I'd be careful with automatically unless you're being super aggressive with these. You might think something's going on in the background, blah, 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 or presenting a case to buy early. All I'm telling you is that there's sell recommendations. Let's move over to the sell recommendations. Two of them have negative earnings growth rate, and that happens to be Match.com and Zoom. Interesting that these others do have positive earnings growth rates. Some of these don't, because they're ETFs. All right. So let's start off there. Let's go look at the graphs. I'll go look at a one-year graph of all of these. I usually don't do that, but let's go look at a one-year graph on all of these. All right, Crocs, I like. Undervalued. Earnings are coming out, most likely. Yep, maybe. Earnings are coming out. I love the stock. Look at that, though. Trading right at a level of support, coming back off the high. Undervalued, rising earnings, dividends. They don't pay a dividend, but I love the sales. I like the stock. Bottom left, top right. Where's the relative safety at 1.35? I think they beat, but it all depends on revenues. Revenues are going to be affected by interest rates. All right. And I think that more and more companies are going to start missing earnings because of the cost of doing business. I think that they beat, though. I think that they beat, Jeff, but I don't know what the revenues are going to be like. Oof, this is a parabolic move. I jumped on this. I have a tight stop on it. This was news driven because fundamentally the stock has good upside potential. The relative safety is below 1. Earnings growth at 35%. I don't know what made it take off real quick like now. Let's go take a look at the news real quick. 15%. 7 hours ago. Signs an exclusive agreement with Prime Commodity Exchange and All Farmers Association of Nigeria. That was news-driven. Fundamentals are partly there. Relative value, the stock's got good upside potential as compared to a AAA corporate bond, and I love the earnings per share. But it's parabolic. I look for a move possibly to pull back tomorrow. All right. Wow. ELF is just a great long-term stock. Stocks can't go up forever. That's a lot of days of going up continuously. It is overvalued. Love the rising earnings. Love the sales. If I own it until it goes below the 20-day exponential moving average, I'm going to leave it alone. That's a beautiful looking equity curve. I can look for CMT below value. Wow, big pullback below the 20-day. That's a sign. That's a sign. I do like the rising earnings and the rising sales. But when I can find a stock that closes below the 20-day exponential moving average on an end-of-day basis, that catches my attention. I'm thinking I would want to give up some. I would want to take half off the table if I don't take it all off the table. All right, especially if you've made some money in it. Next one. I'm not feeling that. This stock has come to a level of resistance right here. It's pulled back and going down. That's it in a nutshell. It's broken through 2 levels of support. If you haven't gotten out of it yet, you need to consider it. I do like the earnings and I like the sales. But right now, price-wise, the stock is not your friend. The stock is not your friend. All right? I'd wait for a better opportunity. Take some of those profits on the table. Kane, is it too late? Again, a stock can't go up forever. It looks like it's pulling back. You know what I would do with this one? I would actually play the 3 and the 8, take off the 20. I'd play the 3 and the 8. Let me change this graph layout. I'll do it that way. On a stock like this, I'd use the 3 and the 8. You know what I would do? On Kane, if you're in it, I would use if the price goes below the 3 to get out of it. If the stock's price end of day goes below the 3, get out of it. Is it too late right now? I would say, yep. I would say it's got to go 5 cents above the high before I jump on board. Right now, I don't think I want to touch it. That stock is hot. That stock is hot and been hot. All right. Thank you, John, for a match in Zoom. All right. Let's go to Monster. Oof. It's split. More people bought it. It's at a level of resistance on the 1-year graph. Let's go put this on a 6-month graph. Oof, that's a good level of resistance. If you're in it, leave it alone. If you're not, another stock that I would wait on end of day to see if it goes below the 3 exponential. The volume is there, but it's starting to fall off. People are losing interest in the stock, so I'd be careful with it. People are losing interest in the stock. That's a bearish divergence as the stock's price is going up, but volume is going down. Let's go look at FICO at a level of resistance. Man, I don't like the volume. Let me zoom in here to take some of that off. I don't like the volume. That's a big volume. Here we go. Now the volume looks better. This is on a 1-month graph. It's at a 1-month high. The 3 and the 8, that was a good opportunity to get in. Broke through 2 levels of resistance, now serving as a level of support. I would, if you're not in it, I'd wait for it to go above there. But if I am in it, leave it alone. The 3 and the 8 end of day still have me in the stock. Let's go to the next stock, Oracle. Ooh, at a level of resistance right about here at about 96.74, but pulling back. If I'm in it, the 3 and the 8 end of day have crossed. I would take some of that off the table. I would definitely take some of that off the table. All right. TT, level of support right here, coming off that level of support. Ooh, see these 2 big wicks? That's some selling pressure right at the level of resistance. I'd leave that alone. 178.72. If I'm in it, leave it alone. If I'm not in it, I'm not touching it right now. That's a lot of selling pressure with the 2 wicks at the top of the candle, right at resistance. 2 things going against me at the same time. If I'm in it, though, I wouldn't mind taking some off the table. If I'm not in it, I'm not touching it. I'm not touching it just quite yet. All right, next one. Ooh, oil. There's I told you, I'm not a fan of oil right now. Came to a level of resistance, the 3 and the 8 cross, big down day, coming to a level of support sitting at 63, 62. I'm not ready to touch oil. Not ready. I think Russia's selling too much dirty oil to everybody and their mama. Cold, it's more of a trade. Nice update today, but look at that give back. Look at the big wick at the top of that candle. If you're trading it, day trading it today, I'd probably take that off the table, whatever I made. All right, because chances are it's probably going to go down tomorrow. Chances are. All right, next one, I've got TLT in a channel. I'm not ready to do anything with that. It gives us an understanding of the long-term treasuries. Yeah, I'm not going to do anything with that. How about that? SPXS, bouncing off support, the 3-8 cross coming up to a level of resistance. This gives me some insight that the market may have some more downturn right now as it's starting to come off of a level of support and the 3 and the 8 have crossed. Man, the backup is there. TFC, that's a bank right at a level of support. Let's use the bodies right at support. I'm not liking it. They're bad. They're bad right there. Same thing with Hertz Global, right at support in a channel, but just trending down. I'm not feeling that right now, but it is at a level of support. Does that give me some room to bounce? Possibly, but I'm not feeling it just quite right now. Let's go to IQ, falling. A lot of these stocks, folks, that you've given me are giving you signs that it ain't good. All right. Now, I do like the wick there, but no follow through. That shows some buying pressure, but no follow through. The 3 and the 8 are definitely bearish and pulling apart. Next one, Zoom just falling. It's zooming down. New low over the last year. Now, a lot of you may be looking at these as way oversold and that they're ready to be bought. Well, the first thing I'm looking for before I think about a stock getting out of oversold territory is the 3 and the 8 to cross. They're getting further apart and moving further down. If I need some semblance, see that here? Let it come to a level of support. I got no support here. I got more free fall. At least let it come to a level of support. Watch the 3-8 cross before you get in. Does that make sense on everybody? Great short ZM. Yeah, I don't disagree with that. All right, next one, match, same thing, same scenario. No level of a support level yet. The 3 and the 8 are just going down, down, down. Both of them are good short positions right now. This is a 1-year graph. And the last one is CDTX. Now, interesting about this one, is it coming to a level of support? Yes. Now, this is more of a sign before I think about buying. But what am I looking for? I'm looking for this bounce off of a buck to see if the 3/8 can cross. That's my confirmation. All right. So, wrong one. Still the wrong one. The right one. Good conversation today. Hit the like button. I'm with you. Hit the like button. We didn't get to my 300 people today, but I think that the people that were here, the people that were supposed to be here, and hopefully you got something out of it. If you did, hit the like button. Once this is up, hit the share. Share this with people on your social circles so that they can see what we do here at VectorVest. If you're new to the channel, hit the subscribe button. This is what we do or try to do in all of our live streams. So I need you guys not to panic. I need you guys to pay attention to what's going on, but I don't want the rug pulled out from under you when the market does decide to go down. Now, I could be wrong and the market go up and you look back at me and go, you're an idiot, Glenn, because the market went back up. The signs are telling me that it's not ready for the market to go back up yet. We looked at it from a Fibonacci level. The market looks like it's got more downside. Our indicators are getting to a point where the market is looking for a bottom, but I think the market's got more downside. And later in May, once the Fed brings out his new, I think it's going to be another 25 basis point raise. The market, and going into the summer months, I think the market's going to be settling in for a long summer's nap. All right. The market's going to be settling in for a long TFC. Did I not talk about TFC? So I wouldn't. I don't know. I got to do this real quick because I know Joey's probably got to go. Is TFC not in here? I don't know. Oh, there it is. I talked about TFC. Right in the level, I drew a level. I talked about it. I did talk about it. So what I'm looking at is to see if this level of support will hold and if it will bounce up. I did. Man, stop making me think that I didn't do what I was supposed to do, because I did it. Stop making me do that. Dag nabbit. What about a golden cross? I don't think we're at a golden cross yet. How many likes did we get before I go? How many likes I get before I go? 65. Man, I can't get 100 likes. Man, really? All right. It is what it is. All the likes do is just really tell me that it was worth it for you to stop by. That's all. Just, it doesn't cost you a thing to do that. Anyway, with that being said, I gotta go. Thanks for bringing up the Fibonacci retracement today. Good info, Glenn. Listen, I'm trying. Like I said, I'm trying to expand my horizons so that I can expand your horizons as well. Real quick. Next week, I'm off on Friday. So next week, the mobile app coaching will be Thursday at 10 o'clock a.m. I'll talk about it again tomorrow, and I'll talk about it again on Friday. Just want to get you prepped. Next week, the mobile training app will be Thursday at 10 a.m. Eastern. All right, so we'll talk more about it tomorrow. All right, with that, I got to go. All right, adios, arrivederci, ciao. Huh? Oh, no. Let's go do that real quick. Let me go back into, do I want it here? Yeah, I'll take it here. Let's go to the web. We are doing a live, www.vectorvest.com. We are doing a live 2-day seminar in LA, education, events, and webcasts. Let's go do that. There it is, 2023 Los Angeles 2-day investment seminar, May 19th through the 20th. Just so that you can take a look at it. 4 of us are going. Me, Steve Chappell, Jim Penna, and Ray Clark. If you want to know more about it, Joey, I'm going to put this link in there. Copy. Here's the link. Paste. Hopefully that works. That is the link for the 2-day investment seminar in Los Angeles. We'd love to see you. All right, we'd love to see you. I wish I joined these streams earlier. I would have saved a lot of money. Thank you for the information, Glenn. Ultra Magnus. That's why I need you to invite people. So I need you to invite people to our channel. All right, that's a great statement, a great testament, and I thank you for that, for saying that. But this is why I'm asking you people to send out, invite them to our channel. I'd love to go to LA. The last place I'm willing to visit. I hear you. Are broadcasting the seminar in LA? No, we are not. This is a live only event. It's not streaming live. It's a live only event. All right. Thank you, Joey. So I'll keep talking about that as we keep going on. It's May 19th and 20th. The link is in there if you want to take advantage of it. Go take a look. All right. Now I got to go. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bom dia. Salam, shalom, namaste, yasu. Until next time, folks, see ya.